Hey everyone, it's Henry, and in this video, I'm going to be talking about Tesla's earnings coming out on October 20th. Now, based on Wall Street consensus, we were expecting to see 223,500 vehicles this quarter, but instead, Tesla absolutely delivered the goods and came in with 241,300 vehicles. That registers as an 8% beat. This 8% beat is a huge impact on the stock long term. I've personally ran many discounted cash flow models when I worked through various finance jobs, and 8% beat on a company with near 30% margins is going to raise their fair value of the shares to a stupid amount. This all happened in a quarter despite the chip shortages and supply chain issues. So is it time to buy Tesla, or is the company valuation already rich? That question and some analysis on where I actually see the stock going in the rest of 2021 and the next year into 2022 is what I'll be discussing in this video. But before we get started, I need you to know I do not have a Patreon, I don't have a course I'm selling or any coupons. I just coach option trading, and I have a private Discord. The Discord is all I do, and I have nothing else to sell you. I only do that because I trade options full time, and I love to see people get results and learn something that has already given me so much financial freedom. All right, let's jump into it. Tesla's numbers are hard statistics. They don't lie. They're straight from the company. I see a lot of analysts calling Tesla overvalued, but honestly, the haters of Tesla, I bet a majority of them just can't change their mind because they know that they're going to look stupid in a bad way, because they are stupid and they're not stupid rich. They missed the boat, but also as analysts, this is their job. So this kind of leaves them no choice but to continue to stick to their guns. It's like having a buddy that lies to you about how much money he has or his success with the ladies. He has to stick to his guns and keep telling you the same story over and over because now his ego is on the line. That's basically Tesla bears, and I sort of understand non-analysts that might not have the best understanding of Tesla's business. These type of people look at price to earnings ratios and say that Tesla's PE is multiples of being reasonable. But the thing is that you really need to understand is you need to look at the price to sales ratio of Tesla. Just look at Amazon, for example. They ran at a negative for a very long time until the company wanted, and the key word is wanted, to turn a profit. And then they basically started having a truck full of hundreds of thousands of dollars every single hour delivered on their front doorstep. The same story happened there. So many critics were saying that Amazon isn't going to turn a profit and they're not going to be able to have a reasonable price to earnings ratio. I even had a college finance professor with his PhD call Amazon overvalued back when it was $500 per share. That professor thought that he was a genius because he was a value investor. He couldn't see the growth story with Amazon. But man, do many finance PhDs absolutely not know anything about actual real world markets. For the intelligent people which are watching my channel, innovation is the way to go. People look at companies like Toyota or Ford and say that the numbers are huge. These are the good companies. Tesla, nah, it's overvalued. These are the same people that resist change. Similar to having a Nokia or a Motorola phone, Tesla is the iPhone. It's the software and hardware of the automotive market that's going to gain mass market appeal. Regardless of how aggressive the delivery numbers are, Tesla just proved that they can deliver more than we ask for. The thing with Tesla that I'm very bullish on, and spoiler, I think that they can beat earnings and the stock may rise short term, but definitely long term, is their margins. I think on the earnings call, we will see good numbers, but also improving margins. Tesla is becoming more vertically integrated. The most expensive part of a traditional vehicle is the engine. For Tesla, that's not a problem. They're improving their margins, scaling up, and a new gigafactory is opening up this quarter. Tesla has undertaken a massive expansion of its manufacturing capabilities. Musk wants to eventually build 20 million electric vehicles a year over the next decade. That's more than double the current production of other automaking giants. So Tesla is now on a mission to rapidly expand its manufacturing capabilities. I did some math. 20 million vehicles times even a low price of $35,000 per vehicle would be $700 billion. Add in Tesla's perpetuity cash flow and it's actually easy to see a $1 trillion valuation. On my private Discord, I keep making spread trades on Tesla that I make 3 to 5% a week on. If you guys want the same results, you should really give it a chance, or at least book a call to learn about the Discord. Now, most important, when Tesla starts pumping out cars in Germany, it will go head to head in electric vehicles with 3 established German names: Volkswagen Group, BMW, and Mercedes-Benz. China may have some advantages like blocking competition, but the German government is less manipulative. I'm long Tesla and have 93 options open on it. You can see most of my positions I have open by watching my portfolio reveal video where I reveal everything that I own right up here, or by looking in the link in the description. Thanks for watching, and give me that fist bump, you champion.